hello, hello. So I hope everybody's having an awesome weekend. This is 50 Pips, 10th of November, 2013. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. The fact that you're listening to this means you've read, you understand, you accept all the disclaimers on the site, on the blog, understanding that this is just some technical analysis for learning, context, educational purposes only. So guys, what's going on? Let's take a look at what we've got shaping up for the week. Let's try and do an even mix of Forex and futures, and let's see what we've got. Tell you what, let's just do blank charts this time. People usually like that. Let's start off with gold. What's going off on gold? So if you're looking at this on a daily, right, pretty much we're hovering around pivotal level, right? And what is that pivotal level? That pivotal level is the 1300, right? So a lot of we've been discussing this for quite some time, and what we've said is that essentially we're stuck inside this current range, which was 1400, 1300, and 1200. Okay. So what we have to say is that as long as we're hovering around this range, this could be very, very choppy. And unless we break outside of the extremes, it's going to be very difficult for this to get a lot of momentum. Clearly, the way to look at this is under 1300 holding a heavy tone, and above 1300 catching a bit more of a bid tone, looking for a move back up. Now, the big question on most people's mind, I assume, or at least most people looking at it from a bigger picture point of view, is are we in the middle of a range shift or not? Okay, and what do we mean by a range shift is that, so 1100 right now, if we look at it, the current range we've been talking about is this 1400, 1300, 1200, right, with this 1300 being mid-range. Now the big question is between the bears and the bulls. Now the bears are looking at this to shift down, right? So for the new range to be 1300, 1200, and 1100, whereas the bulls are looking for this to shift up in range, where the range would be 1300, 1400, 1500. Now, of course, the case is, you can make a pretty good case for both sides. Clearly, the bears are still in control, and they're holding pressure on right now. So what I would say is just don't get fooled or don't get chopped up by the big action or the choppy action rather around the 1300, because it really doesn't mean a lot in the sense that on any break lowers, you see we've got a lot of support that's held, and on any breaks higher we've had resistance that has been sold off into. So I still think there's not, it's not that interesting for me. I still tend to favor the view that we've put in a bottom here, and that we're going to try to rotate back up into the 1500 towards year end. We'll have to see how this behaves, but we're still stuck. So there's really not a lot to say unless we start to get some momentum around this 1300 and really get some movement away from these areas. Okay. So in terms of the ES, I mean the ES, what we said last week, and we said, keep an eye on the Russell, try and look at the Russell for cues going into the week. We tried to get a bit of weakness going on, and the market did start to sell off, but clearly buyers are right back in there. At the moment, the focus, and what we said last time, we felt we had to fail from higher levels. So you see what happened last week. We've got this very nice chance where price pressed back up and failed to take out those highs, and then that's where it failed from, right? So very nice action. One of the first weeks where there were some decent opportunities to try and play the downside, but now we're right back at those highs. So going into the week, what you have to look at how price behaves here. Is it going to break above those recent highs and hold above or not? If it breaks above those 1770s again and it can't hold, expect to see selling pressure. Here the downside, in terms of downside range, it's a bit tricky. It looks like right here what's being supported is these 1730s. this whole support zone down in the 1730s. I still think the healthy move would be on any stronger sell-off to see at least a move back into around the 1700 level for starters. If you look at it on a daily, you can look at something like, for the shorter time frames, you can look at something a 50 moving average, and you see that probably come in line with that 1700, and I think that'll be an interesting area to keep an eye out for if we do get some aggressive selling. So I'd be looking at this as the end of the range, at least, where buyers need to come in to stop a much bigger sell-off. If we don't see aggressive buying coming around that 1700, then I wouldn't be surprised to see a move even back into the low 1600s. I don't think it's looking like that at the moment, but clearly that's something to keep in mind. So going into the week, I'm still focused on those highs. I'm still looking to see how we behave. If we get, if we take those highs out, we could still try to accelerate higher. Any failure, I think, will be an interesting chance to sell into for a move down. My focus is still look at the upside. We might need to fail from higher levels, and I'm still looking very closely at the Russell for Qs, okay? And the last, what are we going to do in terms of futures? Why don't we look at CL, because I think crude's quite interesting, and we've been talking about this for quite some time. Basically, it's starting to stall exactly where we would expect it to stall. You've got a multi-confluence zone. Well, you see basically you've got this higher highs, higher lows that keep on getting bought, and the buyers are coming in right in that range again. Also, this level, by the way, I'm on a weekly, is very interesting because we talked about the confluence of the 200 and the 100 moving average on this weekly, and we said there were some interesting points to sell into, especially when it broke below the 100 level. But as it came into this area, we'd expect it to start to find trouble accelerating lower, and we'd expect to see profit taking in this zone. So far that's happening. I think any kind of basing action is going to be very interesting to look at this as an intermediate term bottom. Any rally, I mean, as it is usually, crude, a lot of the round numbers are important, but just keep an eye on that 100 mark, right? As long as we any rally that gets sold hard into that 100 mark, then we'll probably see it trying to come right back down into this zone. If we don't see any sellers coming in at the 100, then we could see a scope for some more upside, and maybe this could be an intermediate term bottom. But again, I think it's interesting into support here. So going into the week, I'd be looking at this into support rather than ES into resistance, right? And you can read what you need to into that. In terms of the Forex, what I'd be looking at in terms of Forex, let's do Euro cable, and let's do Aussie too. I think Aussie's interesting here. What do we got? Aussie on a daily, I mean, this is just as technical as you can really get. After that very aggressive move down, we talked about, we were looking, we looked at a lot of plays for the long side. Very interesting to play back into that 200 moving average. This is a pretty pure confluence zone. 200 moving average and the 50 back of that move from highs into lows, move right back into the 50 back, confluence with the 200, beautiful sell zone. Very nice action here. So clearly that is the level that the bears need to hold for the continuation down. Now, the fight that's likely going to play out is, you see we've got this, we talked about this range that had formed here, playing this range, and once we broke out of it, that's what gave us the momentum and the pullback into previous resistance, acting as support to go into that very nice sell zone. So now the focus is going to be, look what's interesting here is you've got that top side of that range, previous resistance that acted as support, that's going to be coming in at a multi-confluence zone. Not only of that, if you look at a channel that's right at the bottom of the channel, and also if you look at the move from lows to highs, what's interesting is that you've got a 50 back of the move from lows to highs coming in there. So these are going to be the two interesting zones going into the week. So clearly this is in a bearish formation. and the sell is as pure as you can get for a move right back down. So this is the fight. So going into the week, as long as the support holds, look for this to be able to try at least to make another run up for that 200. If this doesn't hold, then I would expect this to accelerate pretty aggressively to the downside. But clearly the two circles represent the two big zones that the bulls and the bears are going to be holding and should be defending this week, where they should be active. Okay, fairly light data week. I mean, we have data, inflation report out, but UK, but nothing super major, not at least like last week. What's going on cable? What's going on cable? If you look at the weekly, basically you can see that's what's really important is this whole breakup zone, right? We've been talking about this area for ages, and basically it's 58.80s into the 59.30s. Okay, we've been going on, aggressively going on about this, and basically this is that let's call it breakup zone that is held repeatedly, and that's what's supporting here in the light of all the good data and everything. So it's managing to hold a bit of a bid tone here. Now the question is all about that zone. As long as that holds, this should have a chance to try and make a run for the upside. If that breaks, then it could get very aggressive to the downside. I mean, look at it. If you look at it on a daily, or you look at it on a 4-hour chart, it's pretty clear that their area is still catching a bid. We're pretty much around the FOMC range. The chart is on the blog explaining that. So clearly what the bears are looking at, the bears are looking for the top to be in. That's it. They're going to be looking to sell any kind of rally. And most likely what they're going to be looking at, they're going to be looking at a breakdown of this whole support zone, most likely to try and get a move, back into something like the 200-day. And let's see if we have confluence with a 50 back of that move off highs. There you go, bam. Pretty nice confluence here around this 55.30, 55.50. So that's probably a level that the bears are going to have in mind if they manage to break below the 58.80s. Going to try and get more aggressive move down into that zone. Whereas what the bulls are going to be focused on, the bulls are just going to be focused on holding this support, to continue the rotation higher and try to take another stab at those 63.50s, which have been such a key zone, such an important zone, capping all rallies in the past. So that's going to be where those are going to be the interesting things to keep an eye out for on cable going into this week. And last but not least, what's going on euro? So euro, let's get on the weekly. Weekly chart. Had this on the chart for quite a long time. Bam, move sold very aggressively. Where's it stop? Not in the middle of nowhere. It stops exactly pretty much this 200 moving average, catches it on the weekly. What's super interesting about this zone is if you flip over to a daily chart, okay, what you have here, you've got and we talked about this on the blog. I posted the chart pretty much in real time too. You have a confluence of the 200, 100, and the 50 back of the most recent move from lows to highs. Bam, 50 back gets bought pretty much to the pip. Okay, why is this interesting? Because if you look at this is exactly the same kind of zone that held before. It's not as pure as before, but still this is key for the bulls to hold. Most of you are familiar on the blog. This was the pretty much gift for the gods trade we looked at, and basically we talked about this move up, the retracement into a triple confluence zone of the 50 back of the move from lows to highs, the 100 and the 200 moving average, right? Beautiful hold, bam, into the 123, into the 150 extension. So this move now to the new high, right, gives us again a 50 back, which is in line with the 100 and 200. Now it's not as pure as the other one simply because the zone is quite big, so it's a trickier one to trade because you have a pretty wide area here, because we're talking like the 200s coming in pretty much at 132s and the 100 came in at 133, so you've got 120 plus pip zone, so it's a bit wider. You've got the 1.8 which is coming in at 3160, so it's a tighter it's a wider trade. It's not as tight as the other one, but clearly this is a very important zone. What I would say is going into the week, as long as the bulls manage to hold this, then look for this to try and make a stab back higher into those 35s. If we break lower, then what's likely going to come into play is this whole, 31s, 3150s, 31s, that's probably what's going to come into play. Shorter term, it's also been pretty technical, because if you look at it on a, hold on, let me get rid of this circle, if not everybody's going to need sunglasses. On a 15-minute chart, let's get rid of these moving averages because they're not that important here. See what's happening on that strong sell-off. Basically, bam, we move right back down, we get bought. We talked about this pretty much live. You don't want to get short into lows, after a 200 plus pip move down. And what's happening is that on Friday, move back down into the zone, that area got bought again, right? So clearly it's having trouble and it keeps on finding buyers here. Now on the opposite side, what have we got? 1 and 2. You have the bears defending the breakdown zone here, previous support acting as resistance. So the only thing I would say going into the week is don't get fooled by velocity of the move inside this whole area. You need to see sustained move outside of this area for clues. As long as we're inside this zone, as there's not a lot of activity, this could move very quickly, but it could just, confuse people. Don't get confused about velocity inside it needs to move outside. It's just consolidating as long as it stays inside that zone, okay? So I hope that made sense. We did 3 futures and three Forex pairs. Have an awesome week. I'll post this. I hope this is going to take not too long to upload on the YouTube channel. Again, if you like this stuff, don't be shy about sharing it or retweeting or whatever. Thanks a lot. And see you for London Open. Have an awesome one. Thanks a lot for listening, and bye-bye, guys.